I knew this was coming. There were warnings.
Hello everyone and welcome into CrushTheStreet.com. I am Kenneth Amaduri and here we are with another economic crisis news. Sorry, it's been a little bit of time since our last one, but I'm back at it and there's a lot to talk about. Obama is peddling fiction as far as I can tell. He's telling everyone about how great the economy is, the fake unemployment rate, the fake stock market rally, and how everyone is more insured today than they were when he first took office. Now, unfortunately, there's a lot of fiction being peddling there. The jobs numbers are not as good as they seem. They double count people working part-time. There are problems with the people falling off of the labor force participation. And when you consider the fact that prices are going up and things are getting more expensive, people are not living as well as they were years ago, and he is peddling fiction. And ZeroHedge did a really good job with a little aggregate of charts here. And he, at the top left corner, student loans going up exponentially since he took office in 2008. It's no wonder, I would assume, because as more people go unemployed, what do? They go get an education and they go in the hole with mountains of debt to hopefully get a job. It's a sign of the unemployment, watching the student loans go through the roof. And that's not even considering the fact that price of college is going up exponentially, outpacing the benefit of the jobs that people are receiving when they graduate from these 4- and 8-year college programs. Food stamps has gone up. If you look at the chart, it's gone parabolic since Obama went into office. The federal debt started off at around $10 trillion when he took office, and now it's approaching $20 trillion on an exponential curve. And again, that's not even counting unfunded liabilities and the whole credit bubble that is looming over, really, I guess, the next president that takes over. I mean, that's who's going to end up dealing with it. And if a guy like Trump kind of gets in, you know, the non-establishment candidate, there's a good chance this can blow up in his face, and they will blame it on the non-establishment, the free market guy. And again, I'm not a major endorser of Trump. I don't align myself with everything he says, but he's definitely out of the box from your Hillary Clinton, your Jeb Bush, your George Bush. He's not the establishment candidate, and he's rocking the boat in a lot of ways. And I'm almost wondering if the cartel will allow the system to implode on a Trump watch before a Hillary watch, because Hillary is the establishment candidate. And I'm wondering if the powers that be will be a little more open to kicking this can down the road for a longer period of time if their candidate was in the office. Anyway, that was a little side note right there. Money printing going up exponentially under an Obama administration. The Fed balance sheet is like $4.5 trillion. You know, a few years ago it was at $800 billion, and in the last few years it's gone up by $3.5 trillion, almost $4 trillion in a very short order. Healthcare costs going up through the roof, but more people are insured. That's what is important. Not that people are living poor or can't afford to get sick, because the insurance that everyone has is catastrophic. When you got to come up with multiple thousands of dollars to finally get an insurance payout after paying astronomically high insurance premiums, that is not insurance for the people. And a small little sickness is causing people to lose their wealth. And that's the problem with our system that we have today. But it's getting better, according to the president. The labor force participation rate is at 40-year lows. Black inequality is worse than it was when Obama took office. He was supposed to be the president for the people, for the middle class, and he has not been that whatsoever. Median family income is down since he took office. Home ownership rates are down as well. So by what metric things are getting better, I don't know. But this was a great aggregate right here to remind yourself that the economic crisis is still a problem, and it's not what the corporate media and the progressive agenda want you to believe. So the next big decision that the Fed will be releasing is on June 15th, and they will be letting everyone know if the rates are going to be going up, staying the same, or going down. I don't think they're going to lower rates from here, but there's a good chance that they might raise it. Now, on fundamentals, no. But on the surface, they need to show that they have some sort of control. And by being able to raise rates, it lets people know, at least perceivably, that they have a handle and that they can tighten up on monetary policy, because this can't go on forever. Now, unfortunately, I don't think it's possible for the Fed to raise rates without a market response as a result. And we saw that at the beginning of the year, January, the markets were just absolutely rattled. And gold and silver kind of had a move, I think, because of it. There was a lot of fear and panic that ensued through the markets. And I think the chances of this happening once again are very likely. Now, if you go back and look at what happened to the dollar when the Fed raised rates, the dollar did get stronger, and it went up into January. And when we started to have a lot of market problems, we saw the dollar weaken, and gold responded accordingly. So we're at about 95 right now on the DXY. And if we do see some market volatility, some problems, maybe we'll have a short-term spike in the dollar. Precious metals will go down a little bit. But if we see that fear enter into the system, we very much could see the dollar go back in the 92 range and precious metals continue their rise. And I want to stress precious metals here, because gold is trading close to 1,200 at the moment, and silver is, as I speak, let me check, but it was right under $16 an ounce. Right now it's $15.99. I just made a purchase. I called up one of my trusted dealers here, Miles Franklin. You know them, very popular on the internet, and great guys, Andy Hoffman, Andy Scheckman. And I bought, I had to. It's an opportunity here. I know it's difficult to overcome the investor emotions of watching something go down. But if you can overcome that and accumulate here, and then see it go back to 1,300 and silver go back to 18 and then 20, you've accelerated your growth in what you purchased. And the problem is, many of you are going to see it go back to 13, not buy now, but then buy it when it is 1,300 again, when gold is 1,300 and silver is back to $18 an ounce. And you're going to wish you bought when it dipped. And that's a great way. I think you can really save some cost. And, obviously dollar cost averaging is a great way to accumulate. But also maybe being a little more heavy-handed when you see these pullbacks. And again, if you do that, I think your upside overall will, you'll be happier with your upside growth, and not just always buying after you see this massive run because you're worried that this is it. This is gold's big run up, and you got to chase it because you're worried it's going straight to 5,000 and 10,000. Silver's going to $100 and you've missed the boat. So I would just encourage you to buy on the dips And, you guys should be prepared because, there's a lot of things on the horizon, a lot of uncertainties, a lot of derivatives bubbles out there, debt bubbles, political problems. If we see Trump become president, I gotta wonder if the establishment is going to just allow this thing to crash on his watch and just basically throw it in his face. Say, hey, look what happened under a Trump presidency. And boom. If Hillary Clinton gets in, maybe this thing goes on a little longer. I don't know. That's just my speculation. Same thing with Bernie Sanders, though. I don't think Bernie Sanders is going to have a stock market at his back, a Federal Reserve, a banking industry, under his wings, making him look good, the way Obama really, has been. He's had the momentum and the support of the big money, of the uber 1%, and the crony capitalism that is just a huge charade in Washington. On a side note there, that's one thing that Bernie Sanders, I think, hits the nail on the head with, is these big companies, in bed with the government. You got pharmaceuticals now. And I live in California where they're passing SB 277. It's mandatory vaccinations for all kids if they want to go to public and or private schools. And that is a direct handshake between the pharmaceuticals and the government, where the government is making it mandatory for you to transact with a business. And also the banking industry. Look, that goes back to the Federal Reserve, where Aldrich sat in the room with the Rockefeller, Vanderbilt, and all the guys colluding to present some banking act where the banks control the money, control the economy, and control the rules for just massive amounts of profits. And this handshake between the government and certain corporations is a problem. And that's why it's not right for the government to have too much control. And it's not right for us all just to not be treated equally. And that's what it's all about, being treated equally, fairly. We have our freedoms, but that is not the direction this country is going. And the more people are dependent on the government, the more the government and big businesses, big corporations will get away with murder. And we're seeing that. We are seeing a shrinking middle class and a growing just poverty population. And the more this perpetuates, the more the government and the big corporations control us all. So that's my economic crisis news update for today. Everyone, I will be back shortly. It won't be this long of a dry spell without me doing one. Enjoy the interviews that I have coming up that will be released. We got some good ones on the way. Everyone, have a great evening, and I will talk to you later. Bye.